All right, so you're back with us for another deep dive, and as always, we're going to be digging a little deeper into something that's potentially very relevant, especially if you're the kind of person who likes those light bulb moments.
Absolutely, those aha moments, right? When something clicks and you see things in a new light.
Exactly, and I think today's topic could definitely fall into that category, particularly if you're interested in the world of commerce and specifically where it's headed.
I think you're right there. We've been taking a look at this article from The Motley Fool.
Oh yeah, I saw that one. 4 reasons to buy Shopify stock.
Yeah.
Like, there's no tomorrow.
That's the one. It just came out very recently, March 25th, 2025.
Wow. So really hot off the press.
Still steaming.
And for those who maybe aren't familiar with the Motley Fool, they've got a pretty long history, right?
Yeah, they've been around for a while, since 1993, so over 3 decades now, and their whole mission is to make the world smarter, happier, and richer. That's a pretty bold statement.
It is bold,
Yeah.
but they've certainly got a big reach. Millions of people checking out their content every month.
They definitely have a voice in the financial world.
So just to be clear up front, we're not giving investment advice here.
Right, we're not financial advisors.
Not at all. What we really want to do is kind of unpack the core arguments that this Motley Fool article is making about Shopify stock.
Exactly, kind of distilling their thinking, giving you the key takeaways without having to wade through the whole piece yourself.
Your express route to understanding their logic.
Precisely, and I think jumping right into it, their first big reason they highlight is that this is a key part of e-commerce's future.
Right, and this is where they start talking about a pretty fundamental shift that's happening right now in how brands are approaching online sales.
Yes, and it's a move away from what felt for a while like the only game in town.
Those massive online marketplaces.
Exactly. Amazon, eBay, Walmart's online presence. For a long time, it seemed like if a brand wanted to make it online, they had to be on those platforms.
Almost no way around it.
But what the Motley Fool is suggesting is that we're seeing this shift away from that sole reliance.
Brands are realizing they don't have to play by someone else's rules.
Exactly. They're prioritizing having their own dedicated online storefronts, wanting that direct connection with their customers.
And more control over their brand and their messaging.
Absolutely, because ultimately when you're just one of many sellers on a giant marketplace, it's harder to stand out and really cultivate that direct customer relationship.
And let's not forget about the data. When you're on a platform like Amazon, you're essentially handing over valuable customer data.
Right, you're not building your own customer database.
Whereas if you have your own online store,
Yeah.
you're gathering that data directly.
And that's gold for a business.
It really is. So that's where Shopify comes in.
Exactly. They position themselves as that essential toolkit for brands making this transition.
They provide everything from the shopping cart software to payment processing, marketing tools, inventory management, the whole shebang.
Really the full spectrum of e-commerce operations all in one place.
And it seems like a lot of brands are buying into it.
Oh, yeah. While Shopify doesn't publicly share exact numbers anymore, the article estimates that around 5 million online stores are powered by their technology.
Wow, 5 million. That's a huge number.
It is, and to really bring it home, they provide some concrete examples. You've got brands you'd expect like Fragrance Net
Oh, yeah. I've definitely shopped there.
and Skull Candy, but then some more unexpected ones like Carrier, the HVAC company,
Interesting. I wouldn't have thought of them as a Shopify user.
and even Mac Tools Professional Tools using Shopify.
And then the big names like SodaStream and Untuckit.
It really highlights the breadth of Shopify's reach. It's not just for one specific type of business.
It's for pretty much any brand that wants to build their own online presence.
Exactly. And their prediction is that this trend is only going to gain momentum.
Makes sense as the lines between online and physical stores become more and more blurred.
We're seeing that already with click and collect and same-day delivery. It's all becoming integrated.
So that's the first big reason Shopify's role in this changing landscape.
The key player in this shift towards independent e-commerce.
And that kind of naturally leads to the next point, which is all about the potential of e-commerce as a whole.
Right. E-commerce still has plenty of room to grow.
That's a pretty bold statement considering how big it already is.
It is, but they back it up with some interesting data. They cite the U.S. Census Bureau.
Oh, a trusted source.
And according to them, only about 16% of all retail spending in the United States currently happens online.
Wow, so that means 84% is still happening in brick and mortar stores.
Which is a pretty significant chunk of change.
To say the least. Now, to be fair, the article does acknowledge that not everything is going to move online.
Of course, there are limitations, certain categories that might never fully transition.
Like imagine trying to buy fresh produce online. It's just not the same.
Right, you want to see it, touch it, smell it.
And then there are the logistical challenges of certain products, like delivering ice cream without it melting.
Exactly, but even taking those limitations into account, that remaining 84% of retail spending represents a huge potential growth area for e-commerce.
Not just in the U.S., but globally.
And to put some numbers on that growth potential, they cite market research from Precedence Research.
Okay, what are they projecting?
They're predicting an average annual global e-commerce market growth of almost 15% every year, all the way through 2034.
15% every year for the next decade? That's a pretty steep trajectory.
It is, and it becomes clear how that kind of overall market expansion would benefit a company like Shopify.
Right, they provide the infrastructure for so many online businesses to operate and grow.
So if the tide is rising, Shopify's ships are going to rise with it.
Makes sense, and it's definitely something to consider for anyone interested in potential growth sectors and investment opportunities.
Absolutely. All right, so we've covered Shopify's role in the future of e-commerce and the massive growth potential of the market itself now for their third point.
Shopify's revenue is largely recurring regardless of economic conditions.
This one really speaks to the stability of their business model.
Especially relevant given the economic uncertainties we've been seeing.
Right, and the article acknowledges that economic headwinds are always a concern for growth-focused companies.
But they make the case that Shopify might be more resilient than you might think.
They point out that even during tough times like the 2008 financial crisis, consumer spending doesn't just disappear.
People still need to buy things.
Exactly. In the U.S., the total retail spending decline at its worst was about 10% year over year, and that was temporary.
So a dip, but not a complete collapse.
And then they raise an interesting point about the nature of some Shopify stores.
What do you mean?
Well, they categorize a portion of them as offering consumer staples.
The essential.
Exactly the things people need no matter what the economy is doing.
Like food, toiletries, cleaning supplies.
Precisely, and this could provide an extra layer of stability for Shopify.
Because even in a downturn, people are still going to need those essential items.
And they're likely to continue buying them online.
So now let's dig into Shopify's actual revenue model.
It's a two-pronged approach. They have the contractual subscription fees that merchants pay to use the platform.
So that's like a monthly or annual fee?
Right, and then they also collect per transaction fees based on the sales those merchants make.
So they get a cut of each sale.
Exactly. But the article emphasizes that these fees are generally quite affordable for the sellers.
So even if a merchant's sales dip a bit, they're probably still going to stick with Shopify.
That's the thinking, because the cost of switching to another platform might not be worth it.
So it's this combination of recurring subscription revenue and ongoing transaction fees that provides a buffer against economic volatility.
And the fact that some goods sold are essential further strengthens that buffer.
It's all about that stability, which is attractive for investors.
Especially in uncertain times. All right, so on to the fourth and final point from the article.
The stock's recent pullback is a fantastic buying opportunity.
This is where they directly address the valuation of the company in the stock market.
So they're basically saying the stock is on sale.
In a way, the article points out that Shopify's stock price had dropped significantly, around 30% from its peak in mid-February 2025, down to its recent low point.
That's a pretty steep decline.
It is, and they attribute a large part of it to a broader market correction.
Which is basically a widespread drop in stock prices across many sectors.
Exactly. It's not necessarily due to anything specific to Shopify.
Just the market being the market.
Right. And despite this drop, the article emphasizes that the overall sentiment among financial analysts who follow the company remained positive.
So the experts still believe in Shopify.
That's what they're saying. Most of them still rate the stock as a strong buy.
Interesting. So they're not spooked by the price drop?
Not at all. And they even provide a consensus target price, $133.27.
What does that mean?
That's the average price that these analysts believe the stock could reach.
And at the time the article was written, the stock was trading at $109.42.
Right, so that suggests a potential upside of almost 30%.
Wow, so they're seeing a lot of room for the stock to bounce back.
And that's what the article is presenting as the buying opportunity. The price has dropped, but the potential is still there.
So to quickly recap the 4 key arguments from the Motley Fool. First, Shopify's vital role in the evolving world of e-commerce.
Second, the massive growth potential that still exists within the e-commerce market as a whole.
Third, the stability of their largely recurring revenue model.
And finally, that recent dip in the stock price, creating a potential buying opportunity, according to those analysts.
Now, of course, it's crucial to remember As the article itself points out, every investment carries risk.
Absolutely. They even mentioned that Shopify was trading at over 50 times its projected earnings for the next year.
Which means even after the price drop, it wasn't exactly cheap.
Right. So, as always, it's important to do your own research and consider how these points align with your own understanding of the market and your own investment goals and risk tolerance.
Don't just take their word for it.
Exactly. Make your own informed decision.
And I think this whole discussion raises a really interesting question beyond just the financials.
What's that?
Well, as e-commerce continues to evolve, how might platforms like Shopify ultimately reshape the relationship between brands and their customers?
That's a great question to ponder.
It's not just about buying and selling anymore. It's about building those direct connections and fostering loyalty.
And creating those personalized experiences that consumers are increasingly expecting.
Something to think about as we navigate this ever-changing world of commerce.
Absolutely.
All right, well, that's our deep dive into the Motley Fool's take on Shopify stock. Hope you found it insightful. As always, do your own research, and we'll catch you next time for another deep dive.
See you then.